all my traders, this might be the video that changes everything. I'm gonna show you guys a quick recap of how I was able to make $3,000 today trading the futures market. We traded NASDAQ and we traded the Russell 2000s. I'm gonna go ahead show you guys exactly why I entered the trade, why I exit the trade, where I got my levels from, and all sorts of those things. And hopefully after this video, you will learn something that's going to make you a better trader as well. Let's go ahead, jump right into the video. All right, you guys, we're going to do a top-down analysis approach to it. I'm going to show you guys exactly how my levels worked and where I got my levels from and all that good jazz, right? So we're going to start here at the daily time frame. So at the daily time frame, I seen it was in a downtrend. The market's in a downtrend. Looks like it just broke out of a downtrend, but it could be just a pullback, a deep pullback. So the first thing what I usually do is start charting where I believe the stock will go. So over to the left hand side, you're gonna see a lot of wicks. Wicks are very important. So the first thing I want to do is draw out these wicks over here. And as you notice, it's this level right here, this 2000 level. This 2000 level is a psychological level, right? Psychological level. So I want to keep that marked on my charts. Next, I will change this to a pinkish color. Cool. So now the next thing I want to do is put in, this is your high level. So this is where you think the market will reverse, and then also where you think the market will bounce at. So the next level I want to put on here is this level here after it was consolidating and broke out. So I want to mark this level, the high here. As you can see, the market dropped down to that area. So now let's jump on the 5-minute time frame where I actually took the trade at. All right. Now on the 5-minute time frame, what you see the market rallies up. It forms a pending, I don't know what the candles are called, but a reversal candle. This red candle here is a clear reversal candle. That's the candle I like. I like that because also on the RSI is showing oversold. So it's in a supply zone, which means sellers are there. It's likely to reject. Also, the stock is now oversold. So I like the run up earlier. Usually these two big candles before the market reverse also indicates that the market is going to reverse. Because if a stock moves sharply in one direction, it does have to come back down. It has to fill them orders in there because all the orders didn't get filled when the price moved so fast and so aggressively. And after a while of looking at the charts, you're going to notice that if it's a big candle up, it's usually going to be a big candle down, and then it might stagger out throughout the process. But always look at that as well. So let's drop down to the 2-minute chart. Matter of fact, I think I have my drawings saved. Let's go ahead and pull up the drawings that I have saved. Here we go. This is my entry and my exits is here. Let's go to the 1-minute chart so you can see it clearer. So this the run up for the first 10 minutes of the day. It ran up right into the supply zone, and that's what you want to see when you trade in supply and demand or support and resistance. If you're a reversal trader like I am, you want to see the stock move aggressively towards your area of supply, demand, or support resistance, because at that point you know there's enough volume to reverse the market as well. So the first thing I seen, okay, start to stagger out, start to slow down. Now I'm waiting for this drop to happen. I know it's in the supply zone, so there are sellers there. I know it's oversold. So at this point, I just want to manage my risk. If I take this candle here, where will my exits be? That's what I think. If I take this candle, where will my loss be? Obviously, it'll be at the top of this candle. So here is where my loss at. This is my entry. So where do I want to exit if I win this play or if I win this trade? I want to get 2 times my risk. So if I'm entering, let's use the numbers because we're going to go over that because my entry, let me tell you where my entry was at. My entry was at 9:45. So that's the beginning of this candle. 9:45 was my entry. So now I need to make 2 times that. And 9:45, the stock is at, let's say 20, 220. Is at 220. My stop loss is at 256. So that's roughly what, about 25 points? No, 30 points. All right, back to the trade. I had to be right back. So as I was mentioning, so the trade, where I got in at on these QQQ puts or NASDAQ shorts, I got in at 230. So 230 was my entry. So this is my entry right there on that pop up. So it popped up. I risked 30 points. I'm risking about 30 points. And I'm trying to make about double that. So I'm trying to make about 60 points. So that's how you manage your risk. That's how you manage your risk. And the tool that I use is, I use the Fibonacci tool. So if I'm in a trade, I just go to my Fibonacci and I will put this on my chart just like this, indicating this is my entry, the red is my stop, the green is my take profit. So that's exactly how I traded this stock today. And you can tell by all my entries and exits that I have on the screen. And I got a 2-to-1 reward. I exited the first contract here. I took 2 contracts here. I exited one here and then exited another at the wick drop. So that left me with like a $2,600 profit. I did take another trade as well. But I just want to show you guys how you can manage your risk as well as trading, like how to be patient, let the stock come to you. And when it comes to you, all you have to do is start managing your risk. Figure out, hey, where's my stop loss? That's the first thing you need to know, is where's I'm getting out if this goes wrong. Not how much money I'm gonna make and how long I'm gonna hold it. The first one is, let me minimize my risk. That's why the first thing I do is look, see where my risk at. Now I can gauge the candle on my entry. I want my entry to be close to my stop loss, to be honest. The closer my entry is to my stop loss, the less I'm gonna lose if it goes my way. And usually you want to go 2 to 3. You want to have your measuring tool out. And if you guys want me to do a deeper dive into how to measure your stock and how to manage your risk, making sure you're getting 2, 3 to 1, 2 to 1, 3 to 1, 4 to 1 when you trade, please let me know and I'll make that video as well. And yeah, that is my trade of the day. Questions, concerns about how I traded this, feel free to drop a comment. If you like this type of content, drop a comment. Let me know what you guys think. Other than that, I'll see you in the next video.